Assalamu alaikum wa rahmatullahi wa barakatuh. This is Mr. Ishabiyi Olakanmi Olawale, your tutor in financial accounting. We are going to start our discussion with final accounts. Final accounts. Final accounts are the accounts prepared at the end of the accounting period to show the position of the business organization. It is an account which is prepared by various business entities to know their position at the end of the business activities period. It includes trading accounts, profit and loss accounts, and balance sheets. That is the three major accounts which are expected to be prepared are the trading accounts, the profit and loss, and the balance sheet. The form of final account for an organization varies according to the nature of the activities of the business and the entity accounted for. E.g., sole trader or partnership. There are two formats for preparing final accounts. They are the conventional format, which is popularly known as the T format, and the vertical format. Now, let's talk about the forms of final accounts. We are saying that the form of final account is slightly different from one another. That is, we have various business organizations such as the sole proprietorship, the partnership, the limited liability companies, and the rest. The final account to be prepared for these various entities are slightly different, but the major thing is that they are to include trading accounts, profit and loss accounts, as well as the balance sheet. The formats to be used in preparing trading accounts is either the T format, which is the conventional format, or the vertical format. We are going to be discussing trading accounts now. As we know, business enterprises engage in buying and selling of goods and services in order to make profits. And they prepare a statement to know the result of the activities in terms of profits or losses. This is what led to the preparation of final accounts, which include trading accounts, profit and losses accounts, and the balance sheet. Now, trading accounts. Trading account is the account prepared to ascertain the gross profit or loss of a business at a particular period of time, usually a year. It is written as trading account for the year ended so. What that means is that the heading to be on the trading account which is being prepared will read trading account for the year ended so date at which the business ends their activities. For example, if an organization account ends on 31st of December 2017, the heading is going to be written as trading account for the year ended 31st December 2017. More so, if the account ends on 31st of March 2016, the trading account for the year ended will be written as trading account for the year ended 31st March 2016. Trading account is a revenue account which follows the principle of double entry. That is, it has the debit side and the credit side. The balance of the trading account is transferred to the profit or loss account. Now, let's look at the steps in preparing trading accounts using conventional or T format. Step A. On the debit side, you have opening stock, hard net purchases. Our net purchases is derived from purchases plus carriage inward less return outward. Then you less closing stock. The result gives you cost of goods sold. Step B. On the debit side, you start with sales, less return inward. The result will give you net sales. Step C. Deduct the debit side balance, which is cost of goods sold, from the credit side balance, which is net sales. The result will give you either the gross profit or loss. Now, you arrive at gross profit if the net sales is greater than the cost of goods sold. But if the cost of goods sold is greater than the net sales, you arrive at the gross loss. Conventional format of trading accounts. Delighted Gardens Enterprises, trading account for the year ended 31st December 2017. In this our format, we pick a business name which is Delighted Gardens Enterprises, and we believe that our account year ended on 31st December 2017. Now, Delighted Gardens Enterprises trading account for the year ended 31st December 2017. You pick your denomination, which is in this format we use Naira. On the debit side, we have opening stock, hard purchases, hard carriage inward, less return outward, which will give you cost of goods available for sales. Then less closing stock, which now gives you cost of goods sold. Then you move to the other side, the credit side. You start with sales. You less return inward. You arrive at net sales. You now deduct your cost of goods sold from the net sales to determine whether you are going to arrive at the gross profit or the gross loss. The vertical format of trading accounts. As usual, we use Delighted Gardens as our business name. Therefore, Delighted Gardens Enterprises trading account for the year ended 31st December 2017. Naira as our denomination. When you are using vertical format, you start with sales, less return inward, which will give you your net sales. Then opening stock, hard purchases, hard carriage inward, less return outward, less closing stock. That will give you your cost of goods sold. Then deduct that cost of goods sold from the net sales, you arrive at the gross profit or loss. That is the basic explanation of the final accounts and the trading accounts for this first period. In the next class, we are going to look at some terminologies in trading accounts. Assalamu alaikum wa rahmatullahi wa barakatuh.